Hi folks, Dave Evans here with Evans Financial Group, and today we're going to talk about something called a qualified charitable distribution. Now, where this comes into play is, and we've had a number of clients that this has applied to, that you are in the area of your life where you have to take required minimum distributions, which now the law says age 72, was 70 and a half. And from 72 forward, the IRS makes you take required minimum distributions out of qualified money, like IRAs or 401ks if you're not working, because they want the tax money on that distribution. So many of our clients are in a situation where they'll say, Dave, how much do I have to take this year? Because they don't really necessarily need it because they have other sources of income, and they would just as soon leave it to their family or have it for some emergency or whatever. But when they take it, it is a taxable event. Now, where qualified charitable distributions comes in is the same people who are taking required minimum distributions may also be giving to charities like their church or another 501c3 organization. If you're giving money to a charity today, let me back up. Today, the standard deduction for most people is $25,900, which means you pay no taxes on the first $25,900. So unless you're giving really large amounts to your church or to a charity, and have interest on a home, which many of them do not, then they're not getting to deduct any of the monies that they're donating to charities. So, but yet they still have to pay taxes on the required minimum distribution that they receive. So I'm going to use an example here, and it's a tax saving strategy for people who, A, have to get required minimum distributions. So they are age 72. Now, and I want to clarify this. This is actually, you are age 72, not in the year that you turn 72 for this to apply. When you turn 72, my birthday is in February, so anytime during the course of the year that I'm 72, I can take a required minimum distribution. I have to take it that year. But in order to take a qualified charitable distribution and give it to an organization like my church, I have to actually be age 72. So I have to have had a birthday. So if someone's got a birthday in July, they have to wait till July before they give money to their church using this system, or again, or a charity. So let me use some examples because of this, what is classically called the Trump tax code. Because he lowered taxes and raised the standard deduction, a whole lot of people just take the standard deduction of $25,900, which means you pay no taxes on the first $25,900. But you don't get to deduct what you're giving to your church or to a charity. So let's say your required minimum distribution happens to be $15,000 for the year. And let's say you're generous, you're having a good year or whatever, and you give $10,000 to the church or a charity. We'll just say charity. Has to be 501c3, which means an organization that is not subject to taxation under the Internal Revenue Code. Now, so this is the required minimum distribution, and this is the amount that you're giving to your church. Most people that I know would give that money anyway, whether they get a tax deduction or not. But they have to get $15,000, and maybe they have to clear, let's say they have to take $12,000 in order to clear $10,000. Again, we have to settle up with the tax man to give it to the church. What if there's a way that we can have whoever's holding on to your IRA money send the money directly to the charity, okay? And that's where this qualified charitable distribution comes in. So in this example, your tax bracket on this $10,000, on this $15,000 might be, I don't know, let's say 20%. I'm using round numbers, because I'm going to use federal and state together. So 20% of this is roughly $3,000. In fact, it's exactly $3,000. But we're still going to give the money to the charity, but we don't get to deduct it. So if we have who's ever holding on, the custodian, to our IRA money, send the money directly from the custodian to the charity, then we're only paying taxes on $5,000. Now, as you know, because it's a 501c3 organization, they don't pay any income taxes anyway. So now if we're in a 20% bracket, instead of paying $3,000 in taxes, we're only paying 20% on this one, which is $1,000. We just saved $2,000 off of our tax bill every year. Now this really applies to, again, someone who's age 72 or past there and has a propensity to give to charities and or their church on a regular basis. Now when people come to us, sometimes they come to us, and I explained this in June, and there are people who give to their church every month, okay? Well, I said, okay, well now you're 72, we'll just take what you normally would give to the church for July through December, and typically we only do this once a year. The best time to do it is January, because you're going to take the entire year of giving and give it to that organization. What we can't do, and most people that hold on to your IRA, custodians, are not willing to do, is do a monthly distribution out of your IRA and give it to a church, okay, or give it to anybody. So we do it on an annual basis. So in this example, come January, we take $10,000 of what was going to be our required minimum distribution of $15,000, and we send it directly to the charity, and we pay no taxes on that. We pay no taxes, they pay no taxes. We only pay taxes on the $5,000 in this example that's left. So this is the RMD, this is the taxes in our example. So this is a tax saving strategy. It doesn't apply to everyone. Some of my clients say, well, we like the RMD because we use it for vacation, or we use it to pay, I don't know, taxes at the end of the year for our home, or vacation, or we give it away, whatever, and that wouldn't apply. It also wouldn't apply if you're taking a required minimum distribution because you have to, and you don't have a charity that you give to on a regular basis. Now, I've had people that said, okay, I'm going to give this much to my church, but I also have this other charity over here that I support on a regular basis, and so we can do $10,000 in my example here to, let's say, a church, another $1,000 to some other organization, let's say the Food Bank of Louisiana, and we can do that as well. We just have to do it all at one time. So we can't break it up and give monthly distributions to the charity. But this is a tax saving strategy that saves you, in this example, about $2,000 in taxes. And it's completely legitimate. Generally, when the custodian sends the money to the charity, you get some sort of notice, and then at the end of the year, you'll get a notice that said, we sent this money to XYZ charity or XYZ church, so you don't pay taxes on it. On your tax form, it's on the first page, it'll say distributions from IRAs. In this example, it would be $15,000. Amount subject to income taxes, $5,000. But then you have to get with your accountant or who's ever doing your taxes and show them a letter that says, yes, I sent $10,000 to this charity or to this nonprofit organization. And it hasn't been questioned, to my knowledge, since we've been doing it, and we've been doing it for about the last 4 or 5 years, ever since, well, it's probably 4 years since the Trump tax code came into play. Now, the Trump tax code is going to stay in play until 2026. January of 2026, the tax brackets go back to what they were under the Obama administration if Congress doesn't do anything. So, if we have a window for the time being, and what that means is maybe the standard deduction is going to change. Well, today the standard deduction is $25,900. So you pay zero taxes on that first $25,000, and after that you pay about 10% on about the next $18,000 or $19,000. So tax brackets today are typically on sale, and it's a good deal. But even saving 10% of this is still $1,000 on what we give to the charity. So we wanted to share this idea with you because we use it on a regular basis with our clients, and we hope that's helpful to you. I'm Dave Evans with Evans Financial Group, talking about qualified charitable distributions. Thanks a lot. See ya.